All right. Happy Friday, everybody. Good morning and happy Friday, all you magnificent melonheads out there. Today's October 27th, 2023. Big story this morning is, of course, Amazon earnings. Amazon earnings were good. They were better than expected, but they weren't great. And the market needed great. It's been a bloodletting this week. I mean, the NASDAQ dropped over 500 points in the last 2 days alone. And it was really, in my opinion, it was going to take something pretty awesome from Amazon in order to break that trend. And did we get that yesterday? My gut tells me no. What we got yesterday from Amazon was pretty good. Their revenue numbers just blew out expectations. It seems like there's real strength in their core retail business. We got a little bit of confirmation of that today in the PCE results that just came out. Now, unfortunately, there's some details hiding in the PCE results that are not very good, namely the fact that people's spending is rising faster than their wages, which, guys, that's more debt, that's more credit creation, that's more credit cards, that's higher interest, is going to hurt people. So, yeah, Amazon earnings were good, but I don't think it was enough. And noticeably absent from Amazon's earnings was any kind of tangible actual results from artificial intelligence. Now, the market has rewarded these big mega cap tech companies handsomely all year. I mean, these companies are up ridiculous percentages since, what was it, November 28th, November 30th timeframe when ChatGPT was first announced. These mega cap tech companies latched on to ChatGPT. They all started singing a chorus of artificial intelligence, and their stocks just went up and up and up all freaking year long. Now, a year later, where's the results? Really, only Microsoft has delivered anything resembling a result surrounding artificial intelligence, and that's mainly stemming from an increase in the value of their investment in ChatGPT. None of these other big tech companies have delivered anything resembling a result around artificial intelligence. Amazon certainly did. Amazon posted 12% growth in their cloud computing segment yesterday. Now, okay, 12% growth, that's still impressive double-digit growth, but you have to put that in context. A year ago, Amazon Cloud was growing at something like a 60% year-over-year clip. So the growth in Amazon's cloud segment was actually very disappointing yesterday. It's hard to imagine double-digit growth being disappointing, but that's the kind of growth numbers that we've seen from Microsoft. So you're seeing a real, I don't want to say deceleration, because the growth, it's still growing. It's not shrinking, but it is growing at a slower and slower clip quarter after quarter. Now, initially, the market reacted to that yesterday, that 12% growth in the cloud segment, and Amazon stock was getting pummeled. It was down a few percent in the initial minutes after the earnings release, or within an hour or so. And then on the conference call, the CEO made some comments about some large contracts that were signed towards the end of the quarter, as if to suggest, okay, maybe the fourth quarter is going to be good and we're going to see better cloud growth in the fourth quarter. And ever since then, Amazon stock has done pretty well. As of the last time I looked, it was up about 6% this morning. Now, Amazon up 6%, that's big. I don't think that's big enough to offset the decline we saw in Google, the decline we saw in Meta. Microsoft was okay. The banks, again, the earnings were okay, as long as we keep up this pretend charade about held to maturity and act like the banks haven't already lost a lot of our money that we lent to them. But earnings season, guys, it's been a big bag of meh. It's been a big bag of, okay, that's nice. That's cute. All right. It's not terrible. But the market was priced for awesome. Remember, all summer long, the stock market just went up day after day after day. The fear greed index was in extreme greed territory for over a month in June and July. Where's the results? There kind of aren't any. Now, look, I think the market's probably going to be up today because it's sold off like the blazes over the last few days, and it's just due for a dead cat bounce. So I think we probably close green for today. How big? I don't know. My gut tells me what we just got from Amazon, though encouraging, is not going to be enough to reverse the sentiment right now. And again, Where is the AI? Where are the results of AI? Nobody, I don't think, expected AI was going to suddenly result in ballooning earnings for all of these companies, but nothing. No results whatsoever. Just a lot of hopium, just a lot of statements about we expect in years to come, we think we're going to see maybe a lot of hope, potential, no actual tangible results, not even little ones. Microsoft was the only company that delivered anything tangible, any actual dollars moving across the goal line because of artificial intelligence. Everybody else, nothing but hype. With that, let's shrink my big melon of a head and see what's going on in this market this morning. While we're doing that, guys, don't forget that big thumbs up button. Give me a like. It really helps out with the YouTube algorithm. And if you're new to the channel, hit that subscribe button. We do this every morning. The CNN Fear Greed Index is sitting at 29. Let's make sure it's updating. It is. Guys, we've been in this high 20s, kind of on the brink of extreme fear for quite a while now. Now, look, the market is due for a bounce here. I wouldn't be surprised to see a bounce. It just needs that catalyst. I just don't think Amazon was it. Right now, the S&P, it is in positive territory for the day, currently up about 20 points or not quite a half of 1% ahead of the opening bell. Guys, looking at the S&P, just yikes. Check out these last couple of days here. Just brutal. We're probably not going to see a rally sufficient to challenge this 200-day moving average again here. But just a brutal couple of days in the S&P. We broke below that 200-day moving average on Monday, or that was last Friday. We bounced above it Monday and Tuesday, reclaimed it, failed right away. 2 big down days in a row. Again, we'll probably get a little bit of upside today, but I don't think it's going to be enough to reverse this current sell-off. I mean, this is that S&P chart just rolling over. And guys, we got a long way to go down. We're now back into correction territory. Well, actually, I'm sorry. We were right at correction territory for the S&P. We're up a couple of points this morning, so we'll be bouncing off of that 10% from this high from back in July. Important levels here. The Dow currently up 32 points or 0.1% higher ahead of the opening bell, and the NASDAQ is currently up 131 points, 0.9% higher. Again, largely driven by Amazon here. The stock is up pretty big this morning. Also, Intel reported pretty good quarters. Looks like there's a turnaround on the horizon in the PC business, and Intel is being rewarded for that. So tech is outperforming the other indexes this morning. Again, looking at the NASDAQ, guys, another big technical breakdown. Zooming in on here. This is a daily chart. We're going back to about April on this one. Check out here. There's that 200-day moving average. We lost it bigly yesterday. We're going to get a bounce today. Probably not enough to reclaim the 200-day moving average, but we'll see where we go from there. Again, this is AI mania fading here. You hear some mentions of it on these conference calls, but you don't see the financial press fawning over it like schoolgirls anymore, do you? Actually, they're just kind of not talking about it. They're just pretending like that whole mania thing didn't actually happen. And just real quick, let's talk about something else here. Guys, these stocks rallied ridiculous high double digits, in Meta's case, triple-digit percentages off of AI mania, and you can't just stop talking about it all of a sudden. Looking over at the commodities board, we've got December gold futures trading at $19.91. That's down $5.50 this morning, about 0.3% lower for gold. We've got December silver futures trading at $22.94. That's up about 4 cents or 0.16% higher. We've got platinum and palladium are both up a fraction of 1%. West Texas Intermediate up $1.54, trading at 84.77 for December WTI futures right now. We're getting a little bit of a bounce on oil. That's after that big sell-off in oil yesterday. Interestingly enough, we get this big blowout GDP number yesterday, 4.9% GDP growth, and oil sold off over $2. One of these things is not like the other, guys. You're not supposed to have a big sell-off in oil if your economy is booming. Not how that works. Maybe our investments in green energy are finally starting to pay dividends. Please note sarcasm. Also, guys, something I'm just going to touch on real quick on the oil front this morning. Oil's up $1.50. We got this story. U.S. military attacks 2 Syrian facilities. It says we're linked to Iran. Look, guys, we're now involved in 2 proxy wars. I'm not going to get into too much detail here. U.S. troops in U.S. troops in Iraq and Syria have been attacked several times daily for the last week or so with missiles and drones. And yesterday we shot back. So Congratulations. We're now in two proxy wars. We're in a proxy war with Russia in Ukraine, and we're in a proxy war with Iran in Syria, Israel, and Iraq, apparently. I don't want to get too much into this. Please keep it neat in the comments. Also, guys, just know this is probably what's moving oil this morning is that there was airstrikes. What are they calling them? The term that they used, Defense Secretary Lloyd Austin said President Joe Biden ordered precision self-defense strikes following the attacks. Precision self-defense. Doesn't that sound so much more polite than bombing? Isn't that? I bet you that did really well in focus groups. Precision self-defense. No, we're blowing stuff up. That's what we're doing. That's what we do. We bomb people. Okay, moving on. And again, guys, like they're shooting at our guys. So, when you get shot at, you shoot back. I guess that makes sense. It's just two proxy wars at the same time. Great. So we got that going for us. Moving on. Let's take a look at what's going on in the DXY. We've got the Dixie right now at 106.58. It was up pretty big this morning, and then we got PCE numbers around 830, and that was pretty much the turning point there. We've been gapping down ever since, down 1 basis point on the DXY at the moment. And then looking over at the bond market, we've got yields on the long end of the curve are a little bit higher this morning. That's after they were down substantially yesterday. The 10-year lost something like 10 basis points yesterday. Had a little bit of a flight to safety going on in the bond market yesterday. Now, the 30-year today, we've got 3.5 basis points higher. The 30-year yielding 5.023. The 10-year is yielding 4.875. That's up almost 3 basis points. The 2-year at 5.05. That's up 1 basis point. And the 1 month still sitting pretty at 5.4. Now, guys, I just want to point out a couple of things here. This is the 10-year Treasury going back to about July. And I want to draw a couple of lines. We've got that horizontal line there at 5%. That's an important psychological resistance line. But I also want to put a line right around here. It's not showing up when I draw my lines today. This is annoying as all get out. Anyway, all right, we're going to put it right around there. Notice here we've got this prior resistance around 4.8 where we came up, we hit it a couple of times and failed below it, and then eventually retested. And now notice that same point is acting as support here. We've had a couple of days in a row where we came down and we just barely touched 4.8 and we bounced off of that. And guys, that is classic resistance becoming support. And this is telling me that this trend here of the 10-year heading higher, it's still intact, despite the ridiculous story on Monday about Bill Ackman covering his short. And despite that little flight to safety we got yesterday, that big red candle down, until we see a move below 4.8 and we stay there, to me, it looks like this uptrend is still intact. So I wouldn't read too much into the last day or two of moves in the 10 years, not unless we make a move below 4.8 at some point. All right. Let's talk about the big one going on this morning. Amazon stock rallies after profit and revenue beat expectations. A couple of numbers here. Amazon shares rallied in off-hours trading after the tech giant reported stronger than expected quarterly results. Here's a couple of key numbers. Revenue, $143.1 billion. That was above analyst expectations of 141.5. So great revenue numbers there. That's also even above the higher end of their prior guidance. They had previously guided 138 to 143. They delivered 143.1. So a good revenue beat. Net income, again, big beat there, 9.88 billion versus 6.05 billion. So they're doing pretty well. Amazon posted great numbers. Now, this was the rub here, though. Amazon Web Services revenue rose 12% on the year to $23.1 billion. That is the lowest AWS growth that I've ever seen. I haven't gone back to every prior quarter. But again, they were putting up year-over-year growth numbers in like the high 60s, 50% ranges just a few quarters ago. So that 12% growth for the year, that's very disappointing for Amazon's cloud. And that was really driving the narrative. Also, their guidance was a little bit low. The company guided fourth quarter sales of 160 to 167 billion. Analysts were looking for 167.1, so they guided low also. Those two things were taking the stock down after hours yesterday until the CEO made some comments that, yeah, we had gotten some big orders late in the quarter, so it looks like maybe there's going to be a little bit of a surge in growth in AWS. At least that's what they were suggesting. But look, let's talk a little bit about this because, again, it's this AI hopium. Amazon's cloud business has its challengers. Analysts think AI is key to staying dominant. So, okay, analysts think AI is key. Great. That's great. The analysts who have been wrong about everything year to date. Remember the analysts who also told you not to listen to Twitter randos. That was what, $120 ago in NVIDIA stock. Okay, analysts. Amazon's latest earnings report showed it's still the top dog in cloud computing market, but it risks being caught by Microsoft and Alphabet. Amazon's AI strategy is crucial to retaining leadership. Now, guys, there's not anything deliverable here. And that's my point. The whole point of this thing is AI was this big promise. And now we've still, a year later, we've got nothing but hope. Here, even right in this sentence, analysts are hoping there are more contract wins to come, driven by Amazon's provision of access to AI tools and hardware. There might need to be in order to match Microsoft's impressive 28% growth in its own cloud business, although that was from a smaller base. While early, Amazon noted it thinks generative AI will be tens of billions of dollars of revenue for AWS over the next several years. Again, they're just slowly walking back all these ridiculous statements they made about AI over the last year. All of a sudden, they've gone from the next big thing and y'all better hurry up and pass universal basic income because my chat bot is going to put you out of work. And you're just going to have to stay home and collect government stimmies for the rest of your life because there's nothing else for you dumb plebs to do with yourself. You might as well just give up and let AI run your life. That's what they were saying a few months ago. Now they're saying, oh, tens of billions of dollars several years from now. They're really starting to walk this back. Guys, AI mania, there's a couple of pockets. Yeah, NVIDIA did sell a lot of chips, and yeah, companies are hoping to have demand for them in the future. And Microsoft is actually doing something with AI and actually making some money on it. But most of these companies are still just saying, don't worry, years from now, this is going to be huge. Oh, great. I'm still waiting for virtual reality to become the next biggest thing. They've been promising that since, the 1990s? You guys remember when Lawnmower Man came out? Oh, the groundbreaking special effects in Lawnmower Man. Still waiting on virtual reality, although the Meta, there you go, M and J. The metaverse is going to be the next big thing, right? Even though Facebook is just bleeding cash into that stupid idea. AI is just another fad until they actually deliver some earnings off of it. Now, let's talk a little bit about Amazon stock. Doing great this morning, up 5.5%, trading at 126. That's up $6.50. So Amazon is probably driving this growth today in the NASDAQ. Or it could just be a dead cat, guys. The NASDAQ sold off so hard over the last couple of days. It was due for a bounce. It needs to bounce. So we'll see where we close. We'll see how we end the week. Do they close near the highs of the day, or do we sell off into the close? That'll give me some idea of whether Amazon was able to reverse this recent decline or not. My gut tells me it was not enough. Now, another big story that came out today, the personal consumption expenditures. Yesterday, we got the quarter-over-quarter numbers. Today, we get the month-over-month numbers, which are more important. And, guys, this just came out. Let's just talk about it. The annual PCE inflation rate in the U.S. was steady at 3.4% in September, the same as an upwardly revised 3.4% rate last month and in line with forecasts. So a couple of things. Last month's big beat, well, we revised that up. So inflation remains well above our 2% target, doesn't it, J-Pal? That's the key takeaway. Core PCE. Look, we're kind of leveling up. You're probably going to hear a lot of statements over the next 24 hours from these analysts and Keynesians and Paul Krugman, who says, hey, maybe we just need to ditch the 2% target. Maybe 3% should be our new inflation. That's right. If you have loved what the high inflation of the last 50 years has done to your standard of living when 2% was the target, well, you're just going to love the 3% target that they're probably going to roll out. Because, look, it doesn't want to go below 3%, does it? Currently at 3.4. And Powell said he needed to see consistently lower numbers. He wants to see us hit that 2% number a couple of times. We have not hit that 2% number even once yet. And, guys, this is PCE. PCE typically comes in lower than CPI. So CPI is not even anywhere near hitting this level. Now, that was headline PCE. Core PCE came in a little bit worse. Core PCE, the annual rate decreased to 3.7% in September from 3.8% in August. I would add, guys, that this 3.7% core number and the 3.4% headline number, those were both in line with expectations. So, all right, core PCE, that is ticking down a little bit, but again, still well above that 2% target that the Fed has set for us, nowhere near the kind of numbers that the Fed said this is where we would stop with our rate hikes. So the market still thinks the Fed is done with the rate hikes, even though none of the criteria have been met that the Fed has laid out for doing that. Now, what I found to be more alarming in the PCE numbers, besides the numbers, were these next two stats. All right. United States personal income. Personal income in the U.S. rose 0.3% in September over the previous month. These are month-over-month numbers. So we got personal income rose 0.3%. The market was expecting 0.4%. So we got income growth below expectations. However, check out personal spending in the United States. Personal spending in the United States rose by 0.7% from a month earlier. The market was only expecting 0.5%. So once again, our spending is growing faster than our incomes. Our savings is gone. Inflation is still above our target. This is not a recipe for economic prosperity, guys. These are not good numbers. These PCE numbers are terrible. Yes, PCE is still trending down, still well above targets, but we're still spending. Our spending growth is faster than our income growth. And this is just what American people are doing, what consumers are doing, let alone what the idiots in Washington are doing with their spending. It's not good, guys. This doesn't end well. We know where this ends. And this explains why consumer credit and why America's credit card bill just keeps rising. And guys, the interest on that debt is rising right along with it. Sooner or later, the banks are going to cut people off. Couple other quick ones here. One more quick one. China developer Country Garden deemed in default on dollar bonds for the first time. Well, it only took a week for somebody to call this what it actually is. That's great. It was a week ago that Country Garden, it was a month and a week ago that Country Garden failed to make their interest payment on one of their dollar-denominated bonds. And then it was a week ago that the 30-day grace period on those bonds finally expired without them being payment. And it took a week for anybody to point at that and say, hey, they actually defaulted. So now that somebody's actually looking over there and saying the word default, I guess now it's actually a thing, even though they actually defaulted a week ago. The missed payment on interest is an event of default, according to a trustee note. Chinese developer Country Garden Holdings was deemed to be in default on a dollar bond for the first time, underscoring its fall into distress amid a broader property debt crisis that's shaken the world's second biggest economy. Country Garden's failure to pay interest on a note within a grace period that ended last week constitutes an event of default. That's according to a notice to holders from trustee Citicorp International seen by Bloomberg News. That means the trustee must declare principal and interest due immediately if holders of at least 25% in aggregate principal amount of the notes outstanding demand it. But there's no indication that creditors have made any such demand yet. Emphasis yet. Guys, the pace of the collapse of the Chinese real estate market is so nauseatingly slow, largely because everybody's just pretending it's not happening. Also because China doesn't let people take their money out of the country. Capital flight is a huge deal in China. Anyone who can has already gotten their money out of that country. Everybody else is still trying. The government is arresting anybody who does. It's taking a lot longer than you would expect it to, but that doesn't mean it's not going to happen. It's still ongoing. They have a tens of trillions of dollar pile of worthless real estate in that country that nobody wants. It's even worse than the commercial real estate bubble here in the U.S. It's even worse than the housing bubble here in the U.S. That's not to say that this will pop before the U.S. bubble pops, because we have at least something resembling a free market here in the States. I know it's not. We don't actually have price discovery here in the States. We have a bunch of unelected bureaucrats that control the debt market. But it's still a thing. You can't make a problem this big go away just by emperor's decree in Beijing. It just doesn't work that way. So Country Garden still going bankrupt, now officially in default. I guess somebody finally looked and said, yup, that's a default. So good for them. Moving on, guys. I just want to say thank you very much. Mr. Mike M. He says, so I hear that 4.9% GDP was because government spending on September 1st debt was 33.332. Today it's 33.674 trillion. I'm saying that the GDP was false. And Mike M., you are right that the GDP was false. Now, guys, government spending is a component of GDP. So, yes, it's the 4.9% GDP growth. I do believe that was what GDP actually was. But it was fake, and that maybe the number wasn't a lie, but it's not sustainable. It's not organic. It's not real economic growth. It's just the government borrowing money and then pumping it into the economy to try to keep this artificial bubble inflated a little bit longer. It's your classic Keynesian maneuver of blowing money on stupid investments like factories to build EVs that people don't want and solar panels that don't work, and then calling that economic activity. That's great, but it doesn't result in any actual wealth being developed. It doesn't really generate any amount of prosperity. And at the end of the day, when those investments fail, you're left with the bill for it. So it's just going to make the economic decline when that sugar high wears off even worse. So I'm right there with you, Mike. I'd stop short of using the word false. It's fake, but government spending is a legitimate component of GDP. It's not sustainable. It's not prosperity. It's not real economic activity. It's just bureaucrats pumping money into the economy and saying, look how good my plan is working. It's going to come back to haunt us in the long run. Thank you very much, Mike. I appreciate the super chat, support of the channel, sir. And thank you, Steve Woitis. He says a one-year chart on the Dow is showing an impending death cross on the 5,200. Yes, Steve, you're absolutely right. Let's bring that bad boy back up and let's show everybody what Steve is talking about. Good catch. Somebody pointed this one out in the comments yesterday. Was that you, Steve? I'm not sure who it was, but let me bring up the Dow. There we go, the Dow 30. Let's look, and there you go. You guys see what I see and what Steve sees. Look at your 50 line coming down there, and there's your 200 line humming along. And we are currently on pace somewhere probably around the first or second week in November. Bluey go below ready. That is your classic death cross. Majorly bearish technical signal when that happens. That's in the Dow. I would add that the S&P, no, we're a long way off from the death cross in the S&P and a long way off from a death cross in the NASDAQ. So it would be the Dow leading the way there. And wow, that's closer than I realized. That's only a couple of days away, Steve. So good catch, Mr. Woitis. Good technical charting there, sir. Seeing that one coming. And look how far below the 200 we are on that line, how far below the 50. The 50 is falling fast. It's going to get here pretty quick unless we get a big bounce. So good catch there, Steve. Thank you very much, sir, for the super chat, the support of the channel. And thank you, everybody, for spending your morning with us here on the Morning Update Live. I appreciate that very much. So let's see how we close, guys, today. We'll be back to talk about this in our afternoon live stream at 3:15 p.m. today. We're going to talk about banks also this afternoon because something is up in banks. Nobody's really talking about it, but it doesn't look that good. So let's see, is Amazon earnings enough to reverse this trend? Only time will tell. Thank you, everybody, for your time this morning. Thank you for the super chats. Thank you to all my Patreon supporters for everything you guys do for the channel. Hi, Mom. Hi, Dad. Love you guys. Till next time, live small and dream big.